Hey, what's up, guys? Big news yesterday from Rivian on the AI autonomy front. So they had their autonomy day yesterday, and they announced that early next year, they're going to be offering a subscription-based service for their version of full self-driving that they call Autonomy Plus. Good for them. All right, so I'm going to tackle this from two angles: the investment angle and the overall growth of AI angle. Okay, so we'll start with that angle, the overall growth. Overall growth, I think it's great to have competition, right? It's hard for the space to grow if there's only one show in town, aka Tesla. And if that one show in town is traditionally been hated by regulators and has a lot of negative sentiment, it's going to be hard to penetrate markets. But if you got Waymo, Rivian, Hyundai, Amazon's into it now with all this full self, autonomous driving vehicles, it makes it a lot easier for adoption to happen, for regulators to open the doors and to make growth in the space and to make it more accessible to everyone. So I'm rooting for Rivian. I hope they succeed. They make some really cool cars. The tech side of it, I mean, they got LiDAR and radar. I don't know. That's been proven not to work. But what was interesting in this announcement was they're using their own in-house silicon. So they're going to make their own chips, which, brings to question now, getting to the investment side. Let's talk about NVIDIA for a second, because Tesla is making their own chips now, right? Rivian wants to make their own chips. Google makes their own chips. So again, when you're the pick and shovel company, at some point, you kind of hit a wall, right? You hit a wall and then you kind of, what's the growth prospects? I think NVIDIA is okay for the near future, meaning 3 to 5 years. I think they'll be fine because everyone needs chips, so I think they're okay. But long term, you got to really put that into the equation. Now, from the investor side on Rivian, if you look at the stock chart, it's an ugly chart, man. The all-time high was like 180 in 2021. The price right now, I'll tell you, is $19.21, right? So, they're up today a little bit, but they're down like 95% all the time. Here's the problem with Rivian is they have lost more money than any other EV maker. According to this chart right here, they're projected to lose $25 billion by the end of this year cumulatively. So if you like investing in companies that bleed cash, hey, maybe Rivian's a good bet. But from an investor perspective, I'm not touching it. Definitely don't chase it today on 15, 20% gains on autonomy that's supposedly coming next year. But overall, kudos to them. I hope they're successful, and it's good for the space overall. What do you think? Are you rushing out to buy a Rivian to get some of that sweet Autonomy Plus? Or are you just going to buy a Tesla with full self-driving? Or are you like, Dave, you're crazy. How could you let your car drive you around? All right, guys, later.